Hi my dear CA intermediate students, in continuation with our fast track batch for May 24 and November 24 exams. Now we are moving on to the remaining portions that we have not completed. So in that 5-day session, that is segment number 11, returns under GST. So page 274 of your revised book, you please see. So in that segment 11, returns under GST, first we need to understand what are the various returns that are required to be filed by a registered person. So what is the number of the return and who is required to file and what is the due date. And second aspect you need to know is the late fee. So if that return is not filed by the due date, so what will be the consequences, that is late fee is how much. And then we have something called as QRMP, quarterly return and monthly payment scheme. So first we will see the various returns and what is the due date of filing that return. So GSTR1 is the first return. So who is required to file GSTR1? Every registered person. What is the time limit? So we have two time limits. Suppose if the person is under normal, that is not under QRMP. So which person will be under quarterly return monthly payment, whose aggregate turnover during the previous year does not exceed 5 crores, then they will be under QRMP. Okay. Suppose if their aggregate turnover exceeds 5 crores, they cannot go for QRMP. Suppose if a person has opted for QRMP, so they will be filing returns on a quarterly basis. So therefore the due date will be 13th of the month following every quarter. Suppose for example April to June quarter it will be July 13, and for July to September it will be October 13th, like that. So quarterly by 13th of the month following every quarter they need to file the GSTR1. Whereas in case of monthly GSTR1, so then it will be 11th of the month following every month. So that is about GSTR1. So regular scheme, if a person is under regular scheme, so they are required to file GSTR1, and that GSTR1 contains the details of outward supplies as per section 37. So 35 and 36 is accounts and records. So what are the various accounts and records and what is the period of maintenance of such accounts and records. Okay, 37 talks about GSTR1. So quarterly filing 13th of the month following every quarter, and suppose if it is monthly filing, then 11th of the month following every month. There is something called as quarterly return. If the GSTR1 is filed on a quarterly basis, then the recipient can avail ITC also on a quarterly basis. For example, I am your supplier, you are my recipient, so I will be filing GSTR1 on a quarterly basis. When I am filing GSTR1 on a quarterly basis, so that will be reflected in your 2B also on a quarterly basis, which means you will be able to take ITC on a quarterly basis. So that will definitely be causing a disturbance to your business. So due to that reason you will ask me to file the return on a monthly basis, but I cannot do that. So that's why they have given an IFF, invoice furnishing facility, so to the person who is under QRMP, where first month and second month in the quarter, so no need to file return, but just the outward supplies which are B2B supplies, that is sale to registered person, will be reported so in our return GSTR1. So but that GSTR1 which we are going to file in a quarterly basis, so now in the month itself outward supplies B2B, we will report it in IFF, invoice furnishing facility, and those details will be reflected in the GSTR2B of the recipient in the month itself, and he can enjoy the ITC. Why first month and second month in the quarter? So because all 3 months anyhow we will file the GSTR1. So first month and second month, third month will anyhow covered in GSTR1. So this first month and second month we file IFF now. So to report the outward supply details. So this IFF needs to be filed by 13th of the month following every month. That is this. However, a registered person can file IFF on a monthly basis. That is optional. Then GSTR2, if you see one series, there is only one return, and two series 2A, 2B, already we know that is statement of inward supplies, that we will not be filing. So it will be auto populated in the portal. So whereas GSTR3B, in 3 series we have 3B, so section 39. So GSTR2B talks about the statement of inward supplies, that is section 38. 39 is GSTR3B and other returns. So 3B is required to be filed by every registered person, and that is a summary return that contains all details, that is like how much is the output tax, how much is the input tax, and what is the net liability, is there any interest or late fee, all those details will be there in GSTR3B. So when the GSTR3B needs to be filed, the usual date of GSTR3B is 20th of the month following every month, whereas if the person is under QRMP, quarterly return monthly payment, 22nd or 24th of the month following every quarter. Okay, so 22nd or 24th of the month following every quarter. So if it is under QRMP, when 22nd and when 24th, so remember GMCA and states below that. So that is Gujarat, Madhya Pradesh, okay, then Chhattisgarh, Andhra Pradesh and states below that. I have given that under QRMP. So what is the time limit, etc. You can see that in page number 282. So you can have a look into page number 282. So what is the frequency of filing GSTR 3B? Either 22nd or 24th. Okay. In the 22nd, which cases it is 22nd? Remember GMCA and below. GMCA and below. So in the India map, Gujarat. Okay. Gujarat, then Madhya Pradesh, Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh. Okay. If you see the India map, so in that Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh, that will come. All states, these states and below that states, it will be 22nd. Okay. So Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh and states below that. So below that what we have, Telangana we have, Karnataka we have, Tamil Nadu, etc. That will be 22nd of the month following every month. Whereas in case of quarterly, that is other states, remaining states like northern states, northeastern states, etc. and all, it will be 24th of the month following every month. Okay. So that will be taken. So this is the due date of filing GSTR 3B quarterly. Monthly 3B already you know it will be 20th of the month following every month. So therefore we have two time limits. One is 22nd, another is 24th, and which case which one will be as applicable, you know that. Then when it comes to 4, GSTR 4. So 3 we have seen 1, 2, 3 and 4 is annual return to be filed by a person opting for composition scheme. A person who is opting for composition scheme is required to file an annual return. So by 30th April of the succeeding financial year, this we have seen in the composition scheme. So that annual return GSTR 4 by 30th April of next financial year. And not only this annual return, but a person opting for composition scheme is also required to file a quarterly return. So what is the difference between QRMP and composition scheme? Both cases they will file returns on a quarterly basis, but in QRMP they will pay tax on a monthly basis, but in case of composition scheme even tax also will be payable on a quarterly basis. So that is the difference. Okay. So composition scheme, they apart from the annual return, they are required to file a quarterly return in CMP 8 by 18th of the month following every quarter. Okay. So that is the time limit. So 4 series we have seen. Then 5 is a return which is required to be filed by a NRTP, non-resident taxable person. So who is a non-resident taxable person? Who come from other country to this country, India. He is not having any physical place of business. Occasionally he is coming and making supply of goods or services. So he will be called as a non-resident taxable person. So that non-resident taxable person is required to file a monthly return in GSTR 5. What is the time limit? 13th of the month following every month, or 7 days from expiry of registration, whichever is earlier. 13th of the month following every month or 7 days from the expiry of registration, whichever is earlier will be taken as the time limit for filing GSTR 5. And CTP, actually whenever we refer to NRTP, we also compare with CTP. So what is the time limit for filing return by a CTP? For CTP we don't have any separate returns. The regular GSTR 1 and GSTR 3B are right now. So they only will be applicable for a person who is under the CTP, that is casual taxable person. So what is the difference? Already we signed registration. Casual taxable person means a person who is coming from other state to this state, whereas NRTP outside India to India. Okay, NRTP will be filing GSTR 5 and usually they will not get a permanent registration. So they'll get a temporary registration. So that's why 13th of the month following every month or 7 days from expiry of registration. Remember, it's not whichever is later, whichever is earlier, Then next, so we have 5A. 5A is required to be filed by OIDAR supplier. So online information database access and retrieval services provider who is located outside India is making supply to non-taxable online recipient in India. He is required to file GSTR 5A. That's a monthly return, and by when it should be filed? 20th of the month following every month. Even this online money gaming supplier who is located outside India and making supply to any person in India is also required to file this GSTR 5A by 20th of the month following every month. Okay, remember OIDR and online money gaming. OIDR plus online money gaming. Online money gaming. So these two people are required to file GSTR 5A by 20th of the following month, just like 3B, monthly 3B. Then 6. 6 is to be filed by input service distributor. I told you while discussing input tax credit, there is a head office or a corporate office. That head office or corporate office will receive the input services. So with respect to common input services, they will receive and they will avail the ITC and distribute the credit to its branches. So that head office or corporate office is known as input service distributor. So that input service distributor is required to file a monthly return in GSTR 6 by 13th of the month following every month to distribute the credit. Then only the divisions will be able to take that as a credit in their 3B, which is to be filed by 20th. Okay, that's the objective. So input service distributor, what they will do, for example, there is a head office like say a corporate office of MRF Limited, and there is an auditor who is providing audit services to MRF Limited, and they will raise invoice to the corporate office and they will take the ITC with respect to that audit services and distribute it to their factories or branches. So what is the return that the head office is required to file? So GSTR 6 by when? 13th of the month following every month. Then 7 and 8. 7 and 8 are the returns to be filed by TDS TCS deductor. So TDS deductor GSTR 7, TCS deductor GSTR 8. So GSTR 7 by 10th of the month following every month, 8 also by 10th of the month following every month. Okay, so that is a time limit for 7 and 8, and 7 and 8 who will file? So TDS 7, TCS will be 8. So 10th of the month following every month, even they have to pay the TDS TCS, they have to deposit the TDS TCS also by this time. Then next one, GSTR 11. GSTR 11 is a return to be filed by UIN holder. Who is a UIN holder? Unique identification number holder, that UN embassy or consulate or this UN agencies. So these people will be making outward supplies which are exempted. On their inward supplies, whatever GST that they have paid, so that amount they can get it as a refund. So to claim the refund, again I am repeating, there is a UN agency, embassy or consulate. Their outward supplies are exempted. On their inward supplies, whatever GST they have paid, they can get it as a refund. Okay, first of all, they cannot take ITC, so they can get it as a refund. So for claiming the refund, they need to get an identification number, so they will be given a UIN, unique identification number. These people are required to file GSTR 11. When this GSTR 11 is required to be filed, as and when, so they will file the refund claim. At that time, they need to file this GSTR 11. Now there is 2 returns which are missing. After 8, 2 returns are missing. What is that? 9 and 10. What is GSTR 9? GSTR 9 is an annual return. Who is required to file that annual return? Generally, every person whose aggregate turnover exceeds 2 crores, then GSTR 9 is required to be filed. Suppose if my aggregate turnover does not exceed 2 crores, whether I need to file annual return? No, but I can file it optionally. But mandatorily, if my aggregate turnover in a year exceeds 2 crores, okay, GSTR 9 is an annual return. Also, there is something called as 9B also is there. E-commerce operator will be filing that annual return, 9B. That is also same, 31st December of the succeeding financial year. That's the time limit, 31st December of succeeding financial year. Then 9C is a self-certified reconciliation statement. Previously, it was called as audit report. Now, it will be called as self-certified reconciliation statement, 9C. Who is required to file 9C? If my aggregate turnover in a financial year exceeds 5 crores, so then 9C is required to be filed. So you see this, if my aggregate turnover in a financial year is 0 to 2 crores, I am not required to file GSTR 9 or 9C. Okay, suppose if my aggregate turnover exceeds 2 crores but does not exceed 5 crores, then I have to file annual return GSTR 9. Okay, mandatory. Suppose if my aggregate turnover exceeds 5 crores, anyhow 9 I need to file. 9C reconciliation statement also I need to file. Okay, so that is about that. Next, so who is not required to file this GSTR 9? So what is that we have seen? GSTR 9 is annual return. 9B is there, which is return, annual return to be filed by e-commerce operator. 9C is an annual return along with the reconciliation statement. Okay, so when it is applicable, we have seen annual return whenever aggregate turnover exceeds 2 crores. reconciliation statement whenever aggregate turnover exceeds 5 crores. The time limit for all these three is 31st December of the succeeding financial year. Even though my turnover exceeds 2 crores, but I am not required to file annual return in some cases. What are those cases? So that is important for short note. Remember CAG tonic, CAG, Comptroller and Auditor General. So a person whose books of accounts are subject to audit by Comptroller and Auditor General, they are not required to file annual return. So who are required to get audited by CAG? So this public sector undertakings, government departments, etc. Government is also a person under GST. So on their outward supplies, they are also required to pay GST. However, if their books are subject to audit by CAG, they are not required to file an annual return. That is this registered person whose books are subject to audit by CAG. Then tonic, T for TDS deductor. TCS is e-commerce operator. They are anyhow required to file annual return, but TDS deductor not required to file annual return. O for OIDR supplier located outside India making supply to non-taxable online recipient in India. Then N for non-resident taxable person, NRTP, is also not required to file annual return because they will not be staying for a year now. NRTP maximum 180 days only. So then input service distributor. So they will just distribute the credit, they will not have any other transactions. Then casual taxable person also will not be for more than 180 days. So therefore these people, so CAG tonic, CAG registered person whose books of accounts are subject to audit by Comptroller and Auditor General. T, TDS deductor. O, OIDR supplier located outside India. N, NRTP. Then I, input service distributor. C, casual taxable person. Composition, they need to file an annual return. Okay. So then there is one point here about 10, GSTR 10. So GSTR 9 we have seen, 9 series we have seen. Look into GSTR 10. So GSTR 10 is final return. So this final return is GSTR 10. Who is required to file this GSTR 10 final return? So a person whose registration is cancelled. So what is the time limit by which final return needs to be filed? 3 months from the date of cancellation or order of cancellation, whichever is later, it's not whichever is earlier, whichever is later. What is the meaning of date of cancellation? In registration we saw section 29. So there are two ways a person can make application for cancellation of registration, or proper officer can suo motu initiate cancellation. So now in the cancellation order they will mention one effective date of cancellation. So that effective date of cancellation plus 3 months, or the date on which order of cancellation has been served to the person, whichever is later. Usually it will be effective date of cancellation plus 3 months only will be the later date, unless otherwise the cancellation proceedings are delayed, but usually it will be plus 3 months only later. Okay. So date of cancellation plus 3 months or date of order of cancellation, whichever is later. That is about the final return GSTR 10. So that is from GSTR 1 to GSTR 11. Okay, these are the returns that we have. There is something called as first return. First return means it's not a separate return. So immediately after registration, we will be filing our first GSTR 1 or 3B na, that is called as first return. In that first return, not only the details from the date you are liable to get registered, but even before the date you are liable to, like from the date you got the registration certificate, you will be reporting the details. But from the date you are liable to register till the date you got the registration certificate. For example, you are liable to get registered from 15th March. You made application for registration on 10th April. You got the registration on 12th April. Now, from 12th April, no doubt you will report the details. But even you need to report the details from 15th March to 12th April. Why 15th March to 12th April you need to report the details? Because you are liable to register from 15th March. From 15th March to 12th April, whatever is the outward supplies, those details needs to be reported because you have the liability. So you need to pay that liability. So you need to report that. That is this. So that is the concept of first return. When the registration is granted after the date when the person become liable, so for the first time, so he has to file the first return, the date from which he or she liable for registration till the date on which registration has been granted. All those details needs to be incorporated. So that is about various returns and what is the time limit of that returns. Then there is one point here, a note, you see GSTR 1, that is return for outward supplies, GSTR 3B, summary return. GSTR 8, that is e-commerce operator. TCS return. GSTR 9, annual return, cannot be filed belatedly after 3 years from the due date of such return. So what is the time limit within which it should be filed? 3 years. So we have a time limit. If you miss the time limit, maximum we can file it belatedly 3 years. However, government on recommendations of the council may allow to file return after 3 years also. Of course, as we are filing it late, we have to pay the late fee. Then similar time limits, we have some similar time limits that are like time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR 1, GSTR 3B and GSTR 8, it will be same. What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Then, so that is what? Can we rectify the returns? Yes, we can rectify the return GSTR 1 and 3B, but remember that rectification should not be on account of any audit or investigation. Voluntarily, if the registered person has identified the mistake, so then they can rectify the error, okay, rectify the mistakes in the return. So revision in return is not possible in GST. There is only rectification of return, and the time limit is 30th November of succeeding financial year or date of filing annual return, whichever is earlier. However, rectification on account of, suppose scrutiny is done by the department, audit or inspection or any other enforcement activities done by the department, and department identified that you have evaded, now you are paying, those details you cannot rectify and add it in the return. Because of that reason only, so the recipient cannot take ITC. You voluntarily did not pay, but department identified, then you have paid. Now you cannot add it in GSTR 1. As you cannot add it in GSTR 1, it will not come in 2B of the recipient. As it is not coming in 2B of the recipient, recipient cannot avail ITC with respect to that, because only matched ITC can be taken at present. Then next, how invoices will be entered in GSTR 1. In GSTR 1, how the invoices will be reported. So we have outward supplies. That outward supplies is divided into two. B2B supplies and B2C supplies. B2B supplies means what? Supplies to registered person. B2C supplies means what? Supplies to unregistered person. Okay. So B2B supplies, always we need to show invoice wise, because the recipient will be able to take ITC na. Due to that reason, B2B supplies always invoice wise. So interstate supplies or intrastate supplies invoice wise. Whereas B2C, B2C means what? Sale to unregistered person. Sale to unregistered person, suppose if it is intrastate, within the state, we don't have to show invoice wise, just we will do the consolidation. So first you remember these 2 points. So that is, if a person is making outward supplies which are B2B, always it should be reported invoice wise. If it is B2C intrastate, always consolidated. If it is B2C interstate, invoice exceed 2,50,000 per invoice, invoice does not exceed 2,50,000 per invoice. If invoice exceed 2,50,000 per invoice, so then invoice wise details to be uploaded. Otherwise, consolidation we can do, but it is state wise consolidation. So state wise consolidation we need to do. Okay. So that is with respect to this. State wise consolidation means what? How much sales is to Tamil Nadu, how much sales to Karnataka, how much sales to Maharashtra, like that. So state wise consolidation details we need to do. That 2,50,000 is per invoice. Okay. Then next, furnishing the details of inward supplies, section 38. So what is this section 38? Talking about GSTR 2B. So GSTR 2B, GSTR 1 section 37 and GSTR 2B section 38. GSTR 3B and other returns is section 39. So section 38 says that every person, okay, needs to report the details of their outward supplies in GSTR 1. Whatever details that are reported in GSTR 1 will be reflected in GSTR 2B of the recipient, and the recipient will be able to take ITC. That is the first point. Auto-populated statement GSTR 2B based on details furnished by suppliers in GSTR 1, based on details of suppliers in GSTR 1, contains ITC available and ITC not available. So in 2B, there will be two classifications, ITC available, ITC not available. The moment you open a 2B, there will be two columns, two sheets, ITC available, ITC not available. ITC available means your supplier has filed GSTR1 and there is no restriction you can take. Why ITC will not be available? For that they have given ITC may not be available to the recipient. As per 2B, even though invoice is furnished in by supplier in GSTR1, even if your supplier has filed the GSTR1, even then you will not be able to take ITC. So this discussion I have made in input tax credit chapter. What are that? Supplier is a newly registered business, but right now this is not yet notified. Rules are not yet notified in this regard. So just the section is there. Maybe in future the rules will be notified in this regard. Right now it is in the form of a section. Okay. So this may or may not be tested in exam, but you just know that. What are the reasons why? Even if supplier files GSTR1, but it will not be coming in 2B at all. What is the reason? Number one, your supplier is a newly registered business, or supplier has not filed GSTR 3B, by filed GSTR1 not filed 3B, or the liability in 1 is greater than 3B, or the ITC in their 2B is less, but in 3B they have taken more ITC. ITC in their 3B is greater than 2B, or supplier has received a demand notice, means he defaulted in payments and the default continues, or supplier has not fulfilled the conditions of rule 86B. What is rule 86B? So they have to pay 1% of their liability through cash ledger, but your supplier has not done that. So these are the 6 cases. What are the 6 cases? Easily remember, your supplier is a newly registered business. Supplier has filed 1 but not filed 3B, or liability in 1 is greater than 3B, means they reported more liability in 1 but that much they have not paid, or the ITC in their 2B is less but than their 3B, means ITC in 3B they have availed more than the 2B, or they have default in payment of tax and the default continues, or they have not paid 1% of their liability through cash ledger even though they are required to pay. In that cases, even though they file the details in GSTR1, but we will not be getting it in our 2B, but the rules are yet to be notified in this regard. Okay. Then there are 2 rules which 88C was already notified for last attempt and 88D. So these 2 rules are connected. What is these 2 rules about? Now I am a registered person. I will be reporting more liability in my GSTR1, but I will pay lesser liability in my 3B. Okay, why I will report more liability in GSTR1? So that the recipient will take ITC. But I file GSTR1 and 3B, both I will file. If I am not filing 3B, then section 41 gets subtracted. So whatever ITC that you have taken, you need to reverse, etc. and all. We have seen in input tax credit. But here what is happening is that supplier reported the liability in GSTR1 and he filed the 3B also, but there is a mismatch in the liability. My liability as per GSTR1 is 8 lakhs, but my liability as per 3B is only 3 lakhs. So there is a difference of 5 lakhs. So in this case, I will get a notice under 88C. Whereas 88D, when it will trigger, suppose my ITC as per 2B is only 2 lakhs, but I want to take more ITC. So therefore, I have taken in my 3B 3 lakhs, more than 2 lakhs I have taken. So beyond matched ITC I have taken. Now in that case, I will get a notice under 88D. Okay. So when 88C will be applicable, if my liability in GSTR1 is greater than the liability in 3B by such amount and such percentage, so 88C gets subtracted. Then suppose if the ITC in 3B is more than ITC as per 2B, then 88D gets subtracted. Now let's see 88C first. So what will happen if my liability in GSTR1 is greater than 3B? I will get a notice in DRC 1B. DRC 1B. And once I get the notice, so that will be made available in the portal and it will be given to me in email within 7 days. Either I have to accept the difference and pay the difference along with interest, or I need to give the reasons why there is a difference. So there could be genuine cases also. Maybe advance I have received in 1 month and I tax that. For that advance I raised the bill now. For that advance I raised bill now. So it is added in GSTR1, but I have not adjusted that and I did not pay the liability. So which means as per GSTR1, that invoice is added means that is my liability, but actually I don't have the liability. So this is a genuine case. So either you give the explanation or you pay the difference along with interest. or partly accept the difference and partly you give the explanation. So you have to do any of these three. Within 7 days, you have to give a reply. And where we need to give reply? So in the same form, DRC 1B is part A, notice, and part B, we need to give reply. So either pay the difference, explain the difference, or partial payment and explain the difference. Suppose, if you are not doing anything, so within the 7 days, you are not doing anything, you kept quiet, then what will they do? They will do recovery under 79. Direct recovery under 79 means, so whatever money that is there in your bank account, they will attach, and the assets and all they will attach and they will sell, they will realize the money. Recovery of tax under 79, liability posted in electronic liability ledger, and you have to pay that. And till the time you make payment of that, you are not allowed to file returns in GSTR1, not allowed to file your GSTR1 return. As you are not allowed to file GSTR1, you cannot file GSTR3B, because without filing GSTR1, you cannot file 3B. As you are not allowed to file GSTR1, you are not allowed to file 3B also. If you are not able to file GSTR1 and 3B for 2 consecutive periods, e-way bill also cannot be generated. Means literally it will be like, freezing your business. Okay, so you cannot generate e-way bill. If GSTR1 not filed for 2 consecutive tax periods, e-way bill facility gets blocked. You cannot generate e-way bill. If you are not able to generate e-way bill, you cannot send the goods to the recipient. Also, this will lead to suspension of registration. This is the one of the reason for initiating suspension of registration. Contravention of provisions of the Act, which leads to suspension of registration. In that we have seen some 7 points. In that 7 points, this is one wherein this will lead to cancellation of registration. So this is the impact of not giving explanation or not paying the tax, okay, within 7 days. So that is with respect to 88C. Now do see 88D. What is 88D? If your ITC in 3B is greater than your ITC in 2B, then we will get a notice in DRC 1C. Remember, so 88C before alphabet B, so 1B. 88D before alphabet C, so DRC 1C. And how it will be given? It will be uploaded in the portal and it will be sent over mail, and we have to respond to it within 7 days, and response to be filed in part B. So options available, either pay the difference, explain the difference, or partially pay and explain the difference. So is there a genuine reason? Yes, there is a genuine reason. We have seen 3 reasons now in ITC chapter. What is that? Sir, suppose if it is GST paid under RCM, we can take even though not coming in 2B. Or if the ITC is pertaining to some earlier tax period not taken at that time, now I wanted to take, I can take. Or I have availed ITC, reverse the ITC, now I want to re-avail. I can, even though it is not coming in 2B. So these are genuine cases. So give the explanation. If you give the explanation, no issue. So that will only be taken. Okay. And or if it is not genuine, so you make the payment along with interest. Okay. Suppose within 7 days you are not doing anything. So then you will get a notice under 73. So again another notice you will be getting. This is one notice. This is another notice you will get. And thereafter they will do the recovery. But until the time you make the payment, so what will happen? The same consequences. What is that? You cannot file GSTR1 for your outward supplies, as you cannot file GSTR1 for your outward supplies. You cannot file GSTR3B for your outward supplies, as you cannot file GSTR1 and GSTR3B. For consecutive 2 months, your e-way bill will be blocked, and this is also one of the reasons for suspension of registration. These are the 4 consequences. So not allowed to file GSTR1, not allowed to file 3B, e-way bill blocked, and suspension of registration. So more or less 88C and 88D is same, but only there is a difference in the situation. Okay. So that is with respect to this section 38. Now this is just the comparative difference between section 37, 38 and 39. 37 talks about GSTR1, 38 talks about GSTR2B, 39 talks about GSTR3B. GSTR1 details of outward supply plus gross liability, and 2B details of inward supply plus input tax credit, and 3B we will have outward supply, inward supply, output liability, input tax, and interest and late fee. GSTR1 invoice wise, whereas 2B also invoice wise, but 3B is consolidated. And GSTR1 monthly or quarterly it can be filed, 11th of the month following every month, 13th of the month following every quarter. 2B you will not file, it will be made available to you. So on 0.01 hours on 14th of the following month, 13th midnight or 14th morning, anyhow you can take 13th midnight or 14th morning. And 3B, so 20th of the following month, 22nd or 24th of the month following every quarter. And GSTR1, taxpayer is not required to pay GST at the time of filing GSTR1, but at the time of filing 3B, taxpayer is required to pay GST. So if the liability in 1 is greater than 3B, notice or intimation under Rule 88C. If IT is in 3B greater than IT is in 2B, notice or intimation in 88D. Now, so this is the first aspect that we have completed. What are the various returns and what is the time limit of filing such return, and what are the consequences of that liabilities or ITC, etc. Now we are moving on to late fee. Suppose if the return is not filed within the time limit, what will happen? If the return is not filed within the time limit, of course, if there is a delay in payment of tax, interest gets attracted under section 50, and that we have already seen. So interest on account of delay in payment of tax at 18% per annum from the due date till the actual date of payment, that we have seen, that is interest payment. But as there is a delay in filing return, late fee also we need to pay. And what is that late fee? If it is GSTR1 and GSTR3B, if it is GSTR1 and 3B, the late fee is for nil return 10 rupees per day subject to maximum 250. This is under one act, CGST Act. The same amount is payable under SGST Act, but under IGST Act we don't have to pay any late fee. Okay. So for example, it's a nil return. Nil return means what? All the entries in that return will be nil. That is called as nil return. All the entries, there won't be any detail because we have not done any business this month. All the entries in that return is nil, is called as nil return, and that nil return. So if it is delay in filing, 10 rupees per day subject to maximum 250. For example, so let's take 10 days. So 10 into 10, 100 or 250, whichever is lower, okay, subject to maximum 250. So 100 rupees under CGST, 100 under SGST, like that it will be taken. Suppose if the delay is 50 days, so 50 into 10, 500 or 250, whichever is lower. So maximum 250, okay. So whichever is lower, so 250 only will be taken. So that same 250 under SGST Act also. This nil return in case of delay in filing returns. What is the late fee? Now suppose if it is other than nil return, per day late fee will be 25 rupees per day. Per day late fee 25 rupees. Subject to maximum, that maximum will be how much? Suppose if the aggregate turnover during previous year does not exceed 1.5 crores, 1000. If it exceeds 1.5 but does not exceed 5 crores, 2500. If it exceeds 5 crores, then 5000. So this maximum amount you need to remember, because per day late fee will be same, 25 rupees per day. But the maximum, if the aggregate turnover does not exceed, that is, suppose if it exceeds 5 crores, 5000. Does not exceed 5 but exceeds 1.5, 2500. It does not exceed 1.5 crores, 1000. Okay. Then this is common for GSTR1 and 3B. Then 5, 5A and 6. 5 is OIDR, that NRTP, 5A OIDR and 6 is ISD. So same per day late fee same. Nil return 10 rupees, other than nil return 25 rupees. But maximum is constant 5000 rupees only. We don't have any other information. Then GSTR 7. So GSTR 7, already we have seen late fee will be 25 rupees per day subject to maximum 1000. GSTR 8 will be 100 rupees per day subject to maximum 5000. In study material for GSTR 7, they have given us 100 rupees per day subject to maximum 5000. No, because there is a notification in that regard. So that's a mistake in the study material. Okay. So 25 rupees per day subject to maximum 1000, 100 per day subject to maximum 5000. GSTR 4. GSTR 4 is annual return to be filed by a person opting for composition scheme. So what is the annual return to be filed by a person opting for composition scheme? So GSTR 4, who is required to opt for composition scheme? If their aggregate turnover does not exceed 1.5 crores. If their aggregate turnover does not exceed 1.5 crores, what is the maximum late fee? 1000. So easily you can remember, nil return 10 rupees per day subject to maximum 250 same. Other than nil return, so 25 rupees per day subject to maximum 1000. Why 1000? So here 250, here 1000. 10 rupees subject to maximum 250. 25 rupees per day subject to maximum 1000, because their aggregate turnover during previous year does not exceed 1.5 crores. Then GSTR 9 and 9C, 9B, if there is any delay in filing return. So per day late fee also we have different provisions, maximum late fee also we have different provisions. So see here, see this. If their aggregate turnover does not exceed 5 crores, they are required to file only 9. So what is the late fee? 24 rupees per day, subject to maximum 0.02% of turnover. So it's not 0.02, 0.02% of the turnover. Then suppose if it is exceeding 5 crores but does not exceed 20 crores. So the late fee will be double, 50 rupees per day, subject to maximum 0.02% of the turnover. If it exceeds 20 crores, if it goes beyond 20 crores, 100 rupees per day, subject to maximum 0.25% of the turnover. Okay, so it's not 0.02, it's 0.25%. So this late fee you need to remember for MCQ purpose, and the same late fee is payable under SGST Act also. Remember, apart from this, any other return, if there is any delay in filing, so it is standard late fee. What is the standard late fee? 100 rupees per day, subject to maximum 5,000. But these are some discounted late fees that is available here. Okay. Then filing of nil returns through SMS. So you can file your nil return through SMS. Nil return means what? All the entries in the return should be nil. Then it will be called as nil return. Everything, output liability should be nil, input tax should be nil, everything in the return should be nil. Then it will be called as a nil return. What are the returns which can be filed through SMS if it is nil return? GSTR 1, GSTR 3B and CMP 8. These three returns you can file as nil returns through SMS. But remember, all the entries in the return should be nil. Even if few fields are not nil, return cannot be filed through SMS. Then first return already we have seen section 40. So 37, 38, 39. GSTR 1, GSTR 2B, GSTR 3B and other returns. GSTR first return is section 40. Section 40 first return already we discussed. Then section 41 availment of ITC. 42, 43 we don't have. Okay, 42, 43 we don't have. So those sections are omitted. 44 is annual return. 44 is annual return. So this annual return is there na, that is section 44. And this final return is there na, that is section 45. Final return. And section 46 is return to defaulters. Notice to return defaulters. Section 46. That is, if a person has not filed return, a notice will be given in GSTR 3A asking the person to file the return. So what is the time limit within which the return should be filed? In pursuance of notice 15 days. Otherwise, they will initiate assessment. Who department will initiate assessment? That you will learn at final level. What you need to remember? Notice to return defaulters. So if you are not filing return, so they will give a notice, and that notice in GSTR 3A. Once you get the notice, within 15 days you need to file the return. That is section 46. Then section 47 is late fee. Late fee for delay in filing returns. So section 47. Section 48 also we have seen, that is GST practitioner. GST practitioner is section 48. 49 is ledgers. 50 is interest on account of delay in payment of tax. 51 and 52 TDS and TCS. Okay, that sections we have completed. And there is something called as quarterly return monthly payment scheme. So in this QRMP, when the GSTR 1 is required to be filed and 3B required to be filed, GSTR 1 required to be filed by 13th of the month following every quarter, and GSTR 3B by 22nd or 24th of the month following every quarter. So basically this QRMP is one stupid scheme, because rather than filing my GSTR 1 on a quarterly basis, anyhow I will be filing my IFF na. Because see, practically when I am filing GSTR 1 on a quarterly basis, the recipient cannot take ITC on a monthly basis. So he expects me to show the ITC, like report the details monthly. So because of it they created IFF. B2B invoices may be furnished optional. They are telling optional, but the recipient will compel me na to file it. So B2B invoices may be furnished optional on a monthly basis through invoice furnishing facility, which is reflected in 2A or 2B of the recipient. So then practically speaking, so whenever my outward supplies are reported in IFF, so even though it is optional, monthly I will file. Now rather than filing IFF, I can file GSTR 1. Then how the tax needs to be paid? Monthly. So how monthly I will be able to pay tax? I can either ascertain how much is my actual liability. So based on the accounts, I can see how much is the output liability, how much is the input tax credit, and the difference amount I can pay. This is known as self-assessment method. When I can do it on my own, why won't I file my 3B? So therefore, self-assessment method. Suppose if I don't know how much is my exact liability and all, then they have created one ad hoc method, that is fixed sum method. So in fixed sum method, what will happen? So a percentage of your last quarter or last month 3B you will be paying. So in the current quarter for the first month and second month as your ad hoc liability. So monthly payment of tax through PMT6. PMT6 is what? Deposit challan. Using fixed sum method or self-assessment method. By when? By 25th of the month following every month for the first 2 months in the quarter. For example, July to September you are under QRMP. For July month, so by 25th of August, for August month by 25th of September, either I can go for fixed sum or under self-assessment method. Then, to whom this first of all QRMP is applicable? For small taxpayers whose aggregate turnover, not tax, aggregate turnover during previous year does not exceed 5 crores. So for them this QRMP is applicable, and QRMP is GSTIN wise, which means suppose if I have 5 registrations under same permanent account number. In composition scheme what we have studied, so all in all out, all the registrations will be into composition scheme or all registrations will be out of composition scheme, correct? But in case of QRMP it is not like that. So it is like each registration I can decide whether to go for QRMP or to go for monthly payment, that is monthly returns, either quarterly returns or monthly returns I can decide. So QRMP is GSTN wise, and distinct person have the option to avail the scheme for one or more GSTIN. Then what is the time frame to opt in? For example, April to June quarter I want to go for QRMP. By when I should decide? So by when I should opt in? So 1st February 2021 to 30th April 2021 I should decide by that time. 1st April 2021 to 30th April 2021. You can remember it this way. 1 month after commencement of quarter. What is the commencement of quarter? 1st April. 1st April is the commencement of quarter. 1st April. 1 month after. What is 1 month after? April 30. 2 months before. What is 2 months before? So 2 months before is February. So A for after, B for before. Alphabet A is 1. Alphabet B is 2. A for after, B for before. Alphabet A is 1. Alphabet B is 2. So within 1 month after commencement of quarter and 2 months before commencement of quarter, they can decide for QRMP. What is the condition to opt in? You should have filed the last return under monthly, then only you can go for quarterly return. GSTR1 are availing IFF facility. Already I told you. So the scheme provides for IFF, invoice furnishing facility, for the first 2 months. Why not 3rd month? Anyhow, for all 3 months we will file a GSTR1 by 13th of the month following every month, and this is optional. Now whatever details furnished in IFF again need not be furnished in GSTR1. So whatever you furnish, automatically it will come in GSTR1. Suppose if you have not furnished the IFF, then for all 3 months you need to add the invoice in GSTR1. And this IFF is having one exception. Up to what amount I can add the invoices? So the said details of outward supply shall not exceed the value of 50 lakhs in each month. So in a month maximum 50 lakhs only I can enter. The said details of outward supply shall not exceed the value of 50 lakhs in each month, maximum 50 lakhs. Okay. Then next. So I don't know why they have given 50 lakhs, maybe they would have averaged, because 5 crores. 5 crores means 500 lakhs divided by 12 months, on an average 41.66. So that they have taken to 50 lakhs. So this is the maximum amount of outward supplies that we can report in a month. So means we need to decide. Suppose if you have more than the turnover, we should decide as to which details we need to add in IFF. And payment method, there are 2 options, and that can be decided by the registered person. And here it can be decided like in 2 months in the quarter, first 2 months in the quarter, first month FSM, second month SAM, or all 2 months FSM or all 2 months SAM. So like that they can decide. Okay. So two methods are there, FSM, fixed sum method, SAM, self-assessment method. Fixed sum method says, you check your 3B, last 3B file, the previous 3B file. The previous 3B file is monthly 3B. Now see whatever is the net liability of the previous month, 100% of that you pay as the fixed sum month liability, fixed sum method liability for the first month and second month. Monthly filer of 3B of previous quarter, 100% of tax liability in cash paid in the last month of preceding quarter. 100% of tax liability in cash paid in last month of preceding quarter we will pay now. That is monthly filers of 3B. Whereas quarterly filers of 3B, suppose if you are filing 3B on a quarterly basis, then in that case 35% of the previous quarter liability, because the previous quarter is for 3 months. For example, July to September you are going for QRMP. Now previous also you were in QRMP April to June. For April to June you will have filed 3B. In that some net liability is there, that liability is for 3 months. Now in that 35% will be taken as 1 month liability and you will pay 35% of tax liability in cash paid in the preceding quarter. Then self-assessment method is simple. You will compute how much is your exact liability and after considering ITC, and that much amount you will pay. That is self-assessment method. Then any change in the manner of filing 3B, there is no change in the manner of filing 3B. Normally how we will file GSTR1, we will file GSTR1 for 3 months and 3B once we will file for all 3 months, simple. Then compulsory opt-out, when you will opt out of QRMP as and when during the financial year in any quarter, if your aggregate turnover exceeds 5 crores, for example April to June 3 crores, then again July to September 3 crores, so now 3 plus 3 6 crores, it crossed na. So now from the next quarter onwards you cannot be into QRMP. Whenever aggregate turnover exceeds 5 crores in a quarter in a financial year, the remaining quarters and next financial year also not possible. Then levy of late fee, here also we have GSTR1 and GSTR3B na. So because of filing GSTR1 and 3B late beyond the time limit, we have to pay the late fee, but IFF no need to pay any late fee. So late fee would be payable for delay in furnishing 3B, no late fee for delay in payment of tax. Then also no late fee for delay in filing IFF. You just write down no late fee for delay in filing IFF, delay in filing invoice furnishing facility. Then interest computation under QRMP. So in case of quarterly return monthly payment, so interest computation if you see, so we have fixed sum method and self-assessment method. In fixed sum method, so what is that they are telling? If the liability of a particular month, okay, if a liability for a particular month is paid by, not paid by 25th of next month, so then there will be interest. This is common in both FSM and SAM. What is that? For example, you can see here fixed sum method, April to June a person is under QRMP. So 3B liability is 1,50,000. 1,50,000 into 35% is 52,500 for July and August. And this 52,500 should be paid by 25th of August. This 52,500 should be paid by 25th of September. What if it is paid late? Then interest we need to pay 18% per annum for every day delay. This is not only under fixed sum method but also under self-assessment method. Under self-assessment method, irrespective of the previous quarter, so this quarter, first 2 months you will pay your actual liability, ascertain the liability and you will pay. When you should pay? By same 25th of the month following every month. If there is any delay in paying, so then interest will be payable. This is common. Same way, we need to ascertain what is your differential liability. What is the differential liability? Under fixed sum method, if you see, actual liability for July is 60, 70 and 80, okay, minus already 52,500 you paid. So that differential amount. So 60 minus 52,500, 7,500, 70,000 minus 52,500, 17,500 plus 80,000, that is 1,05,000. This 1,05,000 you need to pay by when? 22nd or 24th. Suppose if there is any delay in paying it by filing 3B, then also interest will get attracted for every day delay at 18%. Same way here also. Here also 1,05,000 under self-assessment method also you have to pay 1,05,000 by 22nd October, otherwise interest will be payable. These two interest common. One interest, first interest is for what? Delay in paying monthly liability. Second interest is what? Delay in paying quarterly liability by delay in filing 3B. Now third interest. This third interest is not applicable in case of fixed sum method. The third interest is on the difference between fixed sum method tax and the actual tax. So for example, July to September, July you already paid 52,500 but actual 60. The 7,500 pertains to July. But when are you going to pay? 22nd October. Correct. But you don't have to pay any interest if you pay it by 22nd October. No interest payable on the difference. Because department is only asking you to pay this fixed sum method. So if you pay that amount, there is no interest. Same way here. 70,000 minus 52,500, 70 minus 52,500, 17,500. This 17,500 if you pay by 22nd October, there won't be any interest. Okay, so differential amount. What is differential amount? Actual liability of the month minus FSM of that month. If you pay by 3B due date, you don't have to pay interest. But under self-assessment method, you have to pay that interest. Under self-assessment method, the actual amount minus self-assessment amount, there is a difference now, 60 minus 52,500. On this difference, if you are not making the payment by 22nd October or you pay by 22nd October, you have to pay interest. Interest is payable on the difference. So on this 7,500, you need to pay interest at the rate of 18%. From when? From 25th August till 22nd October, you have to pay. Even on this 17,500, you have to pay interest at the rate of 18% from 25th of September, because August month we have to pay by September. So till 22nd of October, because you are going by your method, self-assessment method. So when you follow department what they say, you don't have to pay the interest on difference. When you do on your own, you have to pay the interest on difference. That is this. This is the extra interest that we have in self-assessment method over fixed sum method. Then if you see invoice furnishing facility. Invoice furnishing facility, there is a supplier who opted for QRMP month 1 and month 2. If they upload the details in IFF, then only third month details they need to upload. And these details should be uploaded by 13th of the month following every month, and it will be reflected in 2B of the recipient, and they can take ITC. Now month 3. So whether first month and second month details are uploaded in IFF, yes. Only third month details to upload in GSTR1, otherwise all 3 months details to upload in GSTR1. And then if it is filed by 13th of the month following every quarter, it will be reflected in 2B of the recipient, and the recipient can take ITC. Then next we have illustrations related to interest computation on QRMP. You see that. Illustration 1, a registered person who has opted for the scheme has paid a total amount of 1 lakh in cash as tax liability in the previous quarter of October to December. So previous quarter October to December, he paid a total amount of 1 lakh, means previous liability was 1 lakh. He opts to pay tax under fixed sum method. Fixed sum method means how much will be the monthly liability? The monthly liability will be 1 lakh into 35%. So 1 lakh into 35% is what? 35,000 rupees. So he therefore pays 35,000 rupees each on 25th February and 25th March for discharging tax liability for first 2 months of the quarter, January and February. So previous quarter, October to December, he was under QRMP. Now for January month, February month, he has to pay 35,000. In his return for the quarter, it is found that liability based on outward and inward supplies for January was 40. So actual liability 40. How much he paid? 35. What is the difference amount? 5,000. And for February 42, actual 42. What is the FSM? 35 already paid. So difference 7. So this 5,000 and 7,000. If you pay by, it is 5,000 and 7,000. If you pay by, like due date, okay, no interest would be payable for the lesser amount of tax, 5,000 and 7,000, if this is paid by 3B due date. So because you are going for fixed sum method. Had it been self-assessment method, we need to pay interest here. Then illustration 2, a registered person has opted for the scheme, has paid an amount of 1 lakh in cash as tax liability for the previous quarter, October to December. So he therefore pays 35,000 by 25th February and 35,000 by 25th March. Now the total all 3 quarters liability is 1 lakh 25. So 1 lakh 25 minus 35 and 35 70. So difference is 30,000. 1 lakh 25 net. In the return it is found that the total liability is 1 lakh 25. So 1 lakh 25. So minus 70 already paid. So the difference is what? 55,000. That has to be paid by due date. But what happened here? The due date is 22nd of April, but he filed it on 30th of April. So there is a delay by 8 days. 22nd April due date. January, February, March. The 3B due date is 22nd April, but he paid on 30th April. He filed on 30th April. So for 8 days on that amount. So had it been filed on time, how much you would have paid? 55. So there is a delay. So on 55,000 interest is payable at the rate of 18%. So from the delay after due date of 3B, so for 8 days, so that is 207 rupees. This is common even under self-assessment method also. Then illustration 3. A registered person has opted for the scheme, has paid a total amount of 1 lakh in cash as tax liability for the previous quarter. He opts to pay tax under self-assessment. So he can go for self-assessment. There is no restriction. He therefore pays 40,000 each on 25th February and 25th March for discharging tax liability for the first 2 months of the quarter, that is January and February. He paid on time. In his return for the quarter filed on due date, that is 22nd April, it is found that the liability based on outward supply and inward supply for January is 40 and February 46. So now what January, what is the actual liability? 40. How much he paid? 40. No issue. February 46. How much he paid? 40. So 6,000. Even though he paid it on time by the due date of 3B, but he need to pay interest on 6,000. From when? The 6,000 pertains to February. So from 26th March till the due date, that is 22nd April. So 26th March till 22nd April. For 28 days, interest is payable on 6,000. So 6,000 into 28 days by 365 into 18%, this 83 rupees is payable. Had it been fixed sum method, this interest will not come on the difference because they are discharging the liability by due date of 3B due to that reason. Okay. Then have a look into the practice manual questions related to returns. So in this first MCQ, the due date of filing final return is, what is the due date of filing final return? 3 months from the date of cancellation or order of cancellation, whichever is later. So option C is the answer. Then which of the following is correct? If aggregate turnover during previous year exceeds 20 crores. Failure to file annual return within the due date attracts a late fee of 200 per day up to 0.25% of its turnover. Failure to file annual return within due date attracts late fee 1%. We don't have 1%. Failure to file annual returns within due date attracts a late fee of 100 rupees per day up to 0.25%. Option C. See, 200 rupees is total. When it is total, then this 0.25 also should become 0.5. Correct. 100 rupees per day. See, what is the late fee? If the aggregate turnover exceeds 5 crores, 25 rupees per day, subject to maximum 0.02%. Then if it exceeds 5 but does not exceed 20, 50 rupees per day, subject to maximum 0.02%. When it exceeds 20, 100 rupees per day, subject to maximum 0.0, that is 25%. Now when it is double, 200 means it should be 0.5, but here it is option C. What is the time limit within which the return is to be filed after notice is served? 15 days. A notice will be given in GSTR 3A. After they give the notice in 3A, we need to file within 15 days from the date of issuance of notice. Okay. So within 15 days from the date of issuance of notice. Option D. Working days or days? Actually it is days, but in the option we don't have days, so that's why we are taking 15 working days, but not from the date of receipt of notice, issuance of notice, A non-resident taxable person registration is getting expired on 7th February. When is he required to file GSTR 5 for Jan 2023? GSTR 5 he need to file by, when? 13th of the month following every month. So January month, 13th of February or 7 days from expiry of registration. 7th February when the registration will expire. So 14th February, okay, 14th February, whichever is earlier. Which is earlier? 13th February is the earlier date. Whichever is earlier. 13th of the month following every month or 7 days from expiry of registration, whichever is earlier. Then descriptive questions you see. Question number 1. Mr. X, a registered taxpayer under regular scheme, did not make any taxable supply during the month of July. Is he required to file a 3B? Even if he is not doing any transactions, he is required to file a 3B, and that 3B can be filed through SMS because it is nil return. It can be filed through SMS, but he need to file 3B, otherwise there is a late fee that is attracted. Then if a return has been filed, how can it be revised if some changes are required to be made? So we have a concept of rectification of return in the subsequent month in the amendment column. So whatever details that we have furnished in the earlier return, if there is any change to be made, that can be made by 30th November of the succeeding financial year or date of filing our return, whichever is earlier. Okay, so that details we need to write. Then next question number 3, Messrs. Kevanon Enterprises, a registered supplier of designer wedding dresses under regular scheme, has aggregate annual turnover of 30 lakhs in the preceding financial year. It is of the view that in the current financial year it is permitted to file its statement of outward supplies on a quarterly basis, while its accountant advises it to file the same on a monthly basis. So if their aggregate turnover during the previous year does not exceed 5 crores, they can definitely go for quarterly return monthly payment, and GSTR 1 can be filed on a quarterly basis by 13th of the month following every quarter. And with respect to their outward supplies to registered person, they can show the details in IFF in every month. So by 13th of the month following every month. So related to QRMP you need to write. Then question number 4. Mr. Kohli is a registered supplier in the state of Gujarat. He is filing GSTR 1 every month. During the month of February, he went out of India and thus could not do any business transaction during that month. He believes that as there is no transaction, there is no need to file GSTR 1 for the month of February. Is he correct? Explain. So as there is no transaction, there is no need to file GSTR 1 for the month of February is wrong. Again, same reason. So they need to file nil return. So this first question we saw, same. They need to file nil return, and that nil return can be filed through SMS, and so if there is any delay in filing that nil return also, there is a late fee that is attracted. Then next, question number 5. Mr. Kalpesh is a registered dealer in Kerala paying tax under composition levy from 1st April. However, he opts to pay tax under regular scheme from 1st December. Is he liable to file GSTR 4 for the period up to November? Discuss. So GSTR 4 is an annual return. In that particular financial year, any few months if you are under composition scheme. So 1st December only he is going, means up to 1st December he was under composition scheme. So definitely he need to file annual return up to November for every, like up to November till the date he was under composition scheme by 30th April of the succeeding financial year. Then next, okay. So Mrs. Zarina, a registered dealer in Rajasthan, did not file 3B for the month of June, but she wants to file 3B for the month of July. Is it possible? No. Without filing the return of the previous month, we cannot file the returns of the current month. So she has to file the GSTR 3B of the previous month, then only she can file the 3B of the current month. A registered person is not allowed to furnish a return for a tax period if the return for any of the previous tax periods has not been furnished by him. Therefore, in the given case, Mrs. Zarina cannot file 3B for July if she has not filed GSTR 3B for the previous month. Then question number 7. X has not made any outward supply during the month of September. However, X has procured certain input services during the month. So, there is no outward supply, but there is inward supplies. X is of the opinion that he can file 3B through SMS. No, he cannot file through SMS, because when you can file through SMS, all the entries in the return should be nil. But here, as there are some inward supplies, means input tax credit is there. So, this return, even though it cannot be called as nil return, and it can never be filed through SMS. Okay. So, because that needs to be disclosed in GSTR 3B, the said input services needs to be disclosed. Then question number 8, all taxpayers are required to file GSTR 1 only after the end of the current tax period. Comment on the validity of the above statement. So, actually this statement is partially valid. What they are telling is that after the end of the month only you can file GSTR 1. That's true. But in some cases we can file GSTR 1 even before the month. That is by a casual taxable person, because they close their business now. So, casual taxable person, or cancellation of registration. So, immediately also they can file cancellation of registration, or a taxpayer who has applied for cancellation of registration will be allowed to file GSTR 1 only after confirming the application, receipt of application. Okay. So, basically in two cases, casual taxable person and cancellation of registration, either suo motu by the department or the application made by the registered person. Then question number 9, A is a chartered accountant in practice and is registered under GST. On a query regarding return filing process by a potential client, A has represented him as a GST practitioner. A is of the view that since he is a qualified chartered accountant with a GST registration in his name of proprietorship firm, he also qualifies as a GST practitioner. Is the understanding of A correct? No. So, GST practitioner, they should get a separate enrollment number. Just because they are a chartered accountant, not default they will become a GST practitioner. So, a chartered accountant can become a GST practitioner. However, holding a certificate of practice as a chartered accountant and having GST registration does not imply that chartered accountant is a GST practitioner as well. For becoming a GST practitioner, even a chartered accountant has to follow the enrollment process. Then, and his name, once he gets the GST enrollment number, his client is there now, his client should add him as the certified GST practitioner for filing the client's returns. Otherwise, practically what we will do, we will take that person's login details and we will file the return. That's what we usually do. Question number 10, quick tax. A GST return filing service provider has asked his clients to provide the scanned copy of the tax invoice issued to B2B customers for uploading on the GST portal and filing the return. No, actually not required. Scanned copy of the invoices need not be uploaded in the portal. So, in GSTR 1 we enter the B2B invoice details, but uploading of invoices not required. Okay. Then question number 11, X Limited is winding up its business in Rajasthan. The tax consultant of X Limited has suggested that X Limited will have to file either the annual return or the final return at the time of voluntary cancellation of registration in the state of Rajasthan. Would you agree to the stand taken by tax consultant? No. They need to file both. So, during the year, as you have made some transactions, you need to file the annual return. And immediately after cancellation, you need to file a final return. So, both annual return is also required, final return is also required. So, therefore, they are required to file both annual return and final return. What is the time limit for final return? 3 months from the date of cancellation or order of cancellation, whichever is later, not earlier, whichever is later. Then question number 12, Miss Kashi, a registered intrastate supplier of goods in Haryana, during the month of August and September, she was out of station on a religious pilgrimage with her family for 55 days. Thus, no business transactions was made during August. Miss Kashi is of the opinion that as there is no transaction, there is no need to file monthly return for the month of August. However, our tax consultant has advised her to file nil 3B whether the advice given by tax consultant is correct. Yes, even though they don't have any transaction, they need to file a nil 3B. Will your answer in A change if Kashi has placed an order for some purchases during the August over her mobile phone, which has been received in her premises, and she intends to take input tax? The moment input tax credit to be taken, it is not a nil return, it's a normal return. And that normal return cannot be filed through SMS. Assuming in A above, Ms. Kashi does not have internet facility in her mobile and there is no facilitation center, whether no return is required to be filed? No. So nil return can be filed through SMS, but as there is some invert supplies, so that return cannot be filed through SMS if it is invert supplies. Otherwise, she can file returns through SMS. Then question number 13. In form GSTR1, submission of invoice-wise details of outward supply is mandatory for all kind of invoices issued during the tax period. Comment on the validity of the above statement with reference to GST law. The statement is not valid. In respect of following outward supplies, consolidated details and not invoice-wise details are required to be uploaded in GSTR1. So they are telling every time consolidated details or invoice-wise details not required. So in few cases, invoice-wise details is required. What are those cases? See, B2B invoice-wise, but when it is consolidated, B2C intrastate consolidated, B2C interstate where the invoice value does not exceed 2,50,000 also state-wise consolidation. Then question number 14, explain the consequences if the taxable person under GST law files the GST return under section 39 but does not make the payment of self-assessed tax. So it is practically not possible to file the return without payment of taxes. Even if that return is filed, that is not called as a valid return. Okay. But this is irrelevant now because we cannot file the return without payment of taxes, that is 3B return, but other returns we can file. Then question number 15, other returns I mean GSTR1. Question number 15, Mr. Gauri Shiva, a registered person in Punjab, supplies goods taxable at 12%, CGST 6%, SGST 6% and IGST 12% in the state of Punjab and Haryana. He has furnished the following details in relation to independent supplies made by him in the quarter ending June. Supply number 1, Mr. A, to Mr. A, a registered person, B2B, definitely invoice wise. Actually the question is what you know, the question is discuss the manner in which the details of our supplies are required to be furnished in GSTR1. So this will be invoice wise, no doubt. Then second, Mr. B, a registered person, don't see anything, invoice. Mr. C, an unregistered person, intrastate 1,50,000 consolidated, unregistered, no, consolidated. Then Mr. D, unregistered person, intrastate 2,60,000, intrastate. The moment you see intrastate, no worry, consolidated. Mr. M, unregistered, interstate 3 lakhs, no, invoice. More than 1 lakh, 2,50,000 na, invoice wise. Then unregistered, interstate 50,000, state wise consolidation, but consolidated, state wise consolidation. Then unregistered B2C, interstate exactly 2,50,000, same, state wise consolidation. Unregistered interstate 2,80,000, invoice wise. Then registered, invoice wise. So only two cases it is consolidated, this 1,80,000 and 2,60,000 consolidated, then this 50 and 2,50,000 state wise consolidation. So 1,80,000, 2,60,000 consolidated, this 50 and 2,50,000 state wise consolidated, all other cases invoice wise details needs to be given. So that is what, first you need to write the provision and then explain how you need to file the invoices or upload the invoices, details of invoices in GSTR1. Question number 16, the aggregate turnover of Mr. Prithvi, a registered person for the financial year 17-18 and 18-19 were 240 lakhs and 270 lakhs respectively. He has not filed the annual return under section 44 before the due date. Discuss the penal provisions, if any, for non-filing of returns before the due date. So what is the penalty here? The penalty will be So 25 rupees per day or 0.2% of the turnover, whichever is higher. You see here, what is the late fee? See the late fee, 2 crores. So 2 crores or 5 crores. Aggregate turnover, boss, aggregate turnover. Please see the aggregate turnover. So they are registered person, previous financial year 17-18 and 18-19, 240, 270. 240 to 70 means turnover exceeds 2 crores but does not exceed 5 crores. Aggregate turnover does not exceed 5 crores. Aggregate turnover does not exceed 5 crores in a year means what will be the late fee? In a year it does not. 25 rupees per day subject to maximum 0.02% of the turnover. Okay. So therefore, in this case, it is not 50 rupees per day. It will be 25 rupees per day. Change it to 25 rupees for every day during such failure continues, because they are asking under CGST Act. Only CGST Act provision we will write, or 0.02% of the turnover, whichever is lower. Okay, this correct. So 25 rupees per day. Then next question number 17. But sir, if there is any waiver, that should be given in the question, otherwise we will take the regular late fee. Question number 17. PQR Limited have filed their GSTR 3B for the month of August 2020 within the due date. It was noticed in October that the tax dues for the month of August has been short paid by 10,000. Already we discussed this question. This question we discussed in payment process. Okay. So this question is covered in payment process. The same illustration we discussed. I'll just show you that page number. So in payment process, while discussing the interest computation, I gave you this question. So see, question number 5, illustration 5, PQR Limited have filed, page 263. So it's there, already it is there. So no need to discuss it. Page 263, same question. The next question number 18. List any 3 situations that warrant issuance of credit note. Briefly explain the timeline to declare such credit note. What is the reason for credit note? So we have seen long section 34 invoice time of supply provisions. So what is that? If the taxable value, actual taxable value is less than the invoice value, or if the tax is less than the tax as per invoice, or sales returns, or deficiency in quality, etc. So credit note can be given. Time limit is 30th November of succeeding financial year, date of filing and return, whichever is earlier. Then question number 19. List the details of outward supplies which can be furnished using IFF. Also briefly list the cases where registered person is debarred from furnishing details of outward supplies in GSTR1 or IFF. So B2B supplies only we need to report in IFF and maximum up to 50 lakhs. A registered person opting for quarterly return monthly payment has to submit invoice furnishing facility the details of outward supplies B2B made to a registered person. Okay, whether it is intrastate or interstate, and whatever details that are reported in IFF need not be reported in GSTR1 filed on a quarterly basis. But GSTR1 or IFF will be blocked if the person if is debarred from furnishing details of outward supplies in GSTR1 IFF, if the person has not furnished the 3B of the preceding 2 months. So if they have not opted for QRMP, or if they have opted for QRMP, they have not furnished the 3B of the previous quarter. So it's actually preceding 1 month. If they have not opted for QRMP, or preceding quarter if they have opted for QRMP. Then question number 20. Mr. Sumit is a registered dealer in the state of Punjab. In the month of May, he decides to apply for QRMP. As he wants to switch to QRMP, he has not filed his returns for the month of May and June. Please guide Mr. Sumit regarding the following conditions and restrictions of QRMP. So the last return should be filed on the date of exercising the option. And what is the time frame for opting in? 1 month before, 1 month after, 2 months before, 1 month after. So in the month of May, he decides to apply for QRMP. So it should have been by last date of first month of the quarter. first day of second month of the previous quarter to last date of the first month of the quarter. Then question number 21. So Mr. Samir, a registered person under GST, is unable to file GSTR 1, reason being showed that tax period exceeds the tax payment exceeds the tax payable under GSTR 3B, which has been filed for the corresponding tax period. Explain the procedure to be followed by department and Mr. Samir for the same as per 88C. So we need to write about 88C. What is 88C? If the liability in GSTR 1 is greater than the liability in GSTR 3B for one or more tax periods, we'll get an intimation in form DRC 1B, and within 7 days we need to give reply. So those details we need to write. Then question number 22. Batra Limited, a normal taxpayer, is winding up its business in Rajkot. The tax consultant of Batra Limited has suggested that Batra Limited will have to file either the annual return or the final return. Already we discussed, no, either one. Already it's a study material question. So they are telling either one. No, both. Annual return because they have a transaction during that period, and final return also they need to file. So they are required to file both annual return and final return here. So these are the questions that we have related to returns under GST. Now we are moving on to the next segment and the last segment, that is segment 12, e-way bill. So e-way bill you can see in page number 292 of the revised book. So basically what is the need of e-way bill? Whenever there is movement of goods from one location to another location, we need to intimate to the department as to what goods we are moving from which location to which location, so that these goods will become accounted, and tomorrow if you are not paying any GST with respect to those goods, so they will have a trial and they will be able to recover that. And at the same time, if you are not reporting these details and if you are carrying the goods so without e-way bill, then in that case, so those goods are liable for seizure and you need to pay a huge penalty, then only the goods will be released. So that is about the background of e-way bill. So first, e-way bill is applicable only in case of goods. So you need to check whether there is movement of goods. Suppose if there is no movement of goods, e-way bill is not necessary. And e-way bill is one document, and if there is movement of goods, whether these goods are exempted goods, yes, then also e-way bill not required. So because exempted goods, e-way bill is not necessary, only for taxable goods e-way bill is necessary. Then is it interstate or out of India? So no. So then it is intrastate, within the state. In case of intrastate, we need to refer to the e-way bill provisions as notified by the state. So is there a different e-way bill provision, sir? Yes, sometimes it will change. Otherwise, whatever is the interstate movement, CGST rules contains the interstate movement e-way bill, whereas SGST rules of the respective state contain the e-way bill provisions of the respective state within the state movement. So now, suppose if the state has not gone for any other change in process, in the sense like change in provisions, so then the provisions of CGST rules is equally applicable for SGST also. So interstate movement provisions is equally applicable for intrastate movement. Okay. Then suppose if it is job work or handicraft goods, always e-way bill is required irrespective of the value. If it is other goods, if the value exceeds 50,000, then only e-way bill required. So in case of goods sent on job work, so not every process will be carried out by the same person. Some process will be carried out by the others also. So for this process, we will send a material from our factory to others factory. For goods sent on job work and handicraft goods. Handicraft goods means, so with respect to goods, which are made out of hand, so a lot of goods which are being transported, handicraft goods. So the two always require e-way bill, whatever may be the value, don't check the value. But if it is any other goods, you check the value. If the value exceeds 50,000, then only e-way bill is required. And then wherever this e-way bill is required, you need to check whether the person is a registered person. That is the person who is sending the goods. Is the supplier a registered person? If the supplier is registered, supplier shall enter the details in part A of e-way bill 1. So in e-way bill form is e-way bill 1, and in that e-way bill 1 there are two parts. Part A contains the invoice details and part B contains the vehicle details. Okay. So if the seller is registered, the seller will will enter the details in part A. And suppose if the seller is unregistered and the buyer is registered, then the buyer will enter the details in part A. If both are unregistered, the transporter will enter the details in part A. What if transporter is unable, either seller or buyer can enroll as citizen of India without having registration, and they can enter the part A details. And then suppose if it is intrastate movement up to 50 kilometers, from where to where? From the place of business of the consignor to the transporter. Place of business of consignor to transporter. There is a consignor, consignee. Consignor to transporter, distance does not exceed 50 kilometers. E-way bill required, but part B only not required. Vehicle details not required. Same way. Transporter to consignee does not exceed 50 kilometers. Intrastate movement. Again, part B not required, but e-way bill is required. Okay, only filing of part B is not required. And once part A is entered, within 15 days, the part B needs to be updated. That is, we need to enter the part B details. Update part B within 15 days from the updation of part A. And who can update part B details? Either the transporter or the supplier or recipient. If it is own vehicle, supplier or recipient. If it is a third party vehicle, the transporter will enter the vehicle details. And say this, it is to be generated before movement of goods. So once the movement commences, we should not before movement of goods. It is not applicable in case of exempted goods. It is not applicable if the value of goods does not exceed 50, but while counting the value, include GST. You include GST and exclude exempted supplies. However, in case of job work and handicrafts, it is required. It has two parts. Part A contains GST and details, and recipient, supplier details, document number, reason for transportation, etc. Part B contains transport details. Once e-way bill is generated, when is it called as e-way bill generated? After we enter part B detail also, part A detail and part B detail, then it is called as e-way bill generated. Once e-way bill is generated, that e-way bill which is generated, so will have a validity. The validity will be counted from the midnight of the day it is generated till the midnight of the next day. So today's midnight to tomorrow's midnight will be counted as one day. Then tomorrow's midnight to day after tomorrow midnight, that will be counted as one day. Like that, the validity will be counted. So the validity of e-way bill, it will be counted from the midnight of the day in which e-way bill is generated. Okay. And what is that validity? If it is over dimensional cargo, means the tail of the cargo is very big, big trucks, that will be coming under over dimensional cargo. Or multi-mode transportation. Multi-mode transportation means up to some distance in roadways, thereafter by waterways, thereafter by railways, like that, multiple modes of transportation, where one of the mode involved in that multi-mode is by waterways. Okay, in these two cases, over dimensional cargo or multi-mode transportation, where one of the mode is by waterways, then it will be one day for every 20 kilometers or part thereof. Suppose if it is any other case other than above, one day for every 200 kilometers or part thereof. For example, you take 480 kilometers. 480 kilometers means first 200 kilometers it will be one day, next 200 kilometers one day, and remaining 80 kilometers it will be third day. So 3 days will be taken as a validity. Suppose if it is over dimensional cargo, so 480 divided by 20, 24 days will be taken as a validity. And suppose if the validity of the e-way bill expires and still the vehicle is in the journey, then the goods will be treated as goods transported without e-way bill, and a penal consequence like penalty etc. will be applicable. Once e-way bill expires, within 8 hours of its expiry, always e-way bill expire by when? By the midnight. So by midnight it will expire. So from there, within 8 hours it can be extended. So say this, suppose the e-way bill is generated on at 0001 hours early morning, okay, for 240 kilometers, means 2 days, on March 8th. So March 8th midnight to March 9th midnight, March 9th midnight to March 10th midnight will be taken as a validity, 2 days. Suppose e-way bill is generated at 001 hours for 140 kilometers on March 8th. 140 means one day. So midnight of March 8th to midnight of March 9th. But suppose if it is over dimensional cargo, 140 means 7 days. 7 days means March 8th midnight. So 9, 10, 11, 12, 13, 14, 15. So midnight of March 15 will be taken as the validity. Then look into some FAQs on e-way bill. When e-way bill is not necessary. So mainly in MCQs or short note they will be asking this. So if you are transporting the goods through non-motorized vehicle means bullock carts, horse carts etc. that do not require e-way bill, or goods transported from customs, port, airport, air cargo complex. That is, whenever the movement of goods is under the control of customs that do not require e-way bill. So port is a place where goods are imported or exported by waterways. Airport is a place where goods are imported or exported by airways. Land customs station is a place where goods are imported or exported through land route. So then inland container depot is a place where there is no port, but all the customs formalities needs to be completed. So this inland container depot deemed port. Then container freight station is a place where stuffing and destuffing of the containers, that is aggregation and segregation of the containers, will take place. That is container freight station. So all these are under the control of customs, including the customs warehouse. Customs warehouse means a warehouse where the goods imported can be deposited without payment of customs duty. And these places, if there is any movement of goods that do not require e-way bill because it is under customs control, but from customs warehouse to importer's place when the goods are taken, that definitely requires e-way bill. Then transit cargo transported to Nepal and Bhutan. Nepal and Bhutan are landlocked countries. So whenever the goods are transported to Nepal and Bhutan from India that do not require e-way bill because the goods are not consumed in India, goods are consumed in other place. Movement of goods for Ministry of Defence. So if defense articles are transported in any mode, okay, it can be in waterways, roadways, etc., that do not require e-way bill because of the safety concerns that is involved. Then empty cargo containers are being transported. So goods, like there won't be anything inside the container, but the container itself is goods. So that's why they are telling that e-way bill not required in that case. Then consignor taking the lorry to the weight bridge. So there is a weight bridge. Usually in a weight bridge, they take the lorry first and they see what is the weight of the lorry. Then again the lorry will go to the factory. They will load the goods in the lorry. Then the lorry will go to the weight bridge. Now they will see what is the weight of the lorry with goods. Weight of the lorry with goods minus weight of the lorry without goods. That difference will be taken as the weight of the goods. So now when the lorry is going to the weight bridge without any goods, definitely e-way bill not required. When the lorry is going to the weight bridge with goods, is it within 20 kilometers? Yes, then e-way bill not required. If it is beyond 20 kilometers, e-way bill is required. That is this point. Then goods transported by rail belonging to government. Usually government goods when it is transported by rail. What is the difference between this point and defense? Defense any mode is e-way bill not required, but government goods transported by rail, e-way bill not required. Also, in case when the goods are transported by railways, what will happen is that we don't have to carry the goods with e-way bill. In the sense, like e-way bill is required, the person, the consignee has to produce the e-way bill in the railways. Consignor will generate the e-way bill. Goods are handed over to railways. Railways will deliver to the consignee. Now the consignee has to produce the e-way bill. So then only the goods will be handed over to the consignee. Then goods specially exempted, specifically exempted as e-way bill requirement from the state government. So states will list out some goods for which e-way bill not required, so that e-way bill not required. Also some goods are given under CGST rules. What are they? LPG for supply to household or non-domestic exempted category customers. So this red color cylinders and non-domestic is also red one, and blue color ones, small one cylinders, so that do not require e-way bill, but regular commercial definitely, the moment it is commercial, that definitely requires e-way bill. Then kerosene sold under PDS, public distribution system, ration shops. Normally kerosene is not exempted, it is actually dutiable, taxable under GST. Even LPG is also taxable, that will not come under petroleum products. So kerosene and LPG are taxable. So kerosene normally sold requires e-way bill, but under public distribution system through ration shops, if it is sold, e-way bill not required. Postal baggage. So Department of Post will carrying the baggage, luggage. So parcels, post parcels, that do not require e-way bill. Then natural or cultured perils, jewelry, goldsmith and silversmith wares, because these are precious articles, costly articles that do not require e-way bill, other than imitation jewelry. Imitation jewelry always requires e-way bill. Then used personal and household effects, like we are relocating the house from one location to another location, so that do not require e-way bill. Then whether e-way bill is required for movement of goods is under supply or not a supply. Yes, whether the movement is under supply or without supply, e-way bill required. Okay, so related to this, I have given one chart at the end. You can see in page 296. So there is some movement of goods. That movement of goods is under supply. And what type of goods it is? Taxable goods. Definitely e-way bill required along with tax invoice. Of course, e-way bill required if the value exceeds 50,000. If it does not exceed 50,000, e-way bill not required. But for handicrafts and goods sent on job work, even if value does not exceed 50,000, e-way bill required, that's okay. But tax invoice plus e-way bill. If it is exempted goods, no e-way bill, just bill of supply. Suppose if it is without supply but taxable goods, delivery challan plus e-way bill, exempted goods just the delivery challan. Okay. So whether the goods are moved under supply or without supply, e-way bill is required. Then look into the third FAQ. Whether that 50,000 limit is for taxable goods or exempted goods. Taxable goods. Suppose if in an invoice there is both taxable goods and exempted goods, you take out the exempted goods, you see only the taxable goods. If the value of the taxable goods exceeds 50,000, then e-way bill required. Then while computing the invoice value, whether GST will be included or not, yes, we need to include the GST, and if that exceeds 50,000 after adding GST, then only e-way bill required. Who will generate e-way bill? Suppose if the supplier is registered, the supplier will generate e-way bill. If the supplier is unregistered, the recipient is registered, recipient. If both are unregistered, the transporter will generate e-way bill. Suppose if the supplier has not generated e-way bill because the value does not exceed 50,000. Now there are 10 such suppliers. Value of each consignment does not exceed 10,000. All these 10 suppliers has delivered the cargo to the transporter. Now the transporter accumulated these 10 parcels, but the value of these 10 parcels accumulated value is more than 50,000. Now whether the transporter is required to generate e-way bill for each package? Yes. For each package individually, transporter should generate e-way bill plus all goods transported in a single vehicle. So a consolidated e-way bill is also required. That consolidated e-way bill is e-way bill 2. Individual packages, e-way bill 1. Consolidated all these packages in the single carriage, e-way bill 2. Transporter should generate the e-way bill as form EWB 1 or EWB 2. EWB 1 is single e-way bill, EWB 2 is consolidated e-way bill, where all the consignments in a conveyance individually is less than or equals to 50, but in aggregate exceeds 50,000. Then other points in case of bill to ship to transactions. Bill to ship to means what? You placed an order with me to deliver the goods to a third person. Now I will deliver the goods to third person and raise invoice to you. Now in that case there are two supplies. Already we discussed in place of supply. So now should the single e-way bill is required or two e-way bills are required? Single e-way bill only. In case of bill to ship to transactions, one e-way bill is sufficient and it can be generated either by the consignor or by the consignee. Then multi-vehicle updation is possible in e-way bill. Multi-vehicle updation means what? Up to some distance in one vehicle, thereafter in another vehicle. So then no need to generate new e-way bill, same e-way bill, just the multi-vehicle updation facility is there. You just add the vehicle number. Then in case e-invoice is issued, generally when e-invoice is issued, physical copy of the invoice not required, but the e-invoice will have a QR code now. That if it is embedded, that will be sufficient. So the QR code having an embedded invoice reference number may be produced electronically as and when the officer requires. So in lieu of physical copy, we can show that. Then blocking of e-way bill. In some cases, our e-way bill will be blocked for our outward supplies. If the person, say for example myself, I have not filed GSTR1 for consecutive 2 tax periods, or 3B not filed for consecutive 2 tax periods, or if I am under composition scheme, I have not filed CMP8 for consecutive 2 tax periods, or my registration is suspended because my liability in GSTR1 greater than 3B for 1 or more tax periods, or I have wrongly availed the ITC, or I have not paid 1% of my liability through cash ledger. In these cases, my outward supplies e-way bill will be blocked. But for my inward supplies, e-way bill can be generated, and for my outward supplies, I cannot generate e-way bill, my recipient cannot generate e-way bill, my transporter also cannot generate e-way bill. So no person including consignor, consignee, transporter or e-commerce operator or a courier agency be allowed to furnish the information in e-way bill for any outward movement of goods in these cases. However, if once I regularize the return, I can request the commissioner. So thereafter it will be unblocked and I can continue filing the or generating the e-way bill. Then see the next page. Form GST EWB or e-way bill. So part A, part B. Part A contains details of invoice. So who will be generating part A? Registered person causing movement of goods. We know who that is. If the supplier is registered, that supplier. If the supplier is unregistered, the recipient is registered, such recipient. If both are unregistered, the transporter. Part B, if it is own conveyance or hired conveyance or public transportation, we know the vehicle number. So either the supplier or recipient who is causing movement of goods, they will enter the vehicle number. Suppose if the goods are transported through aircraft or railways or vessels, there won't be vehicle number. So the transport document number, what is that, airway bill, bill of lading or railway receipt, that will be entered. And if it is transporter is only causing movement of goods, so transporter will enter the vehicle number. And EWB2 is a consolidated e-way bill. So all individual consignments transport in a single carriage, the transporter will be generating this consolidated e-way bill. Then remember, once e-way bill is generated, suppose if the supply is not made, it can be cancelled, but it should be cancelled within 24 hours of its generation, and the officer should not verify that. Once the officer has verified that e-way bill, means the goods are transported, so cancellation is not possible. So remember, 24 hours of its generation. Then we have few questions from the practice manual related to this. Segment 12, e-way bill. So see the first question, discuss the correctness of the following statement. Once generated in e-way bill cannot be cancelled. False. E-way bill can be cancelled within 24 hours of its generation. E-way bill can be cancelled provided the e-way bill is not verified by the officer during the transit. Then e-way bill generated in one state is valid in another state. Yes. So whatever e-way bill that is generated in one state, not necessary that in another state again another e-way bill is required to be generated. This is same. Then question number 2, it is mandatory to furnish the details of conveyance in part B of e-way bill. Comment on the validity of the above statement. Generally, we need to enter the vehicle details in part B, but we have a relaxation. If the goods are transported from the place of business of the consignor to the place of business of the transporter, or place of business of the transporter to the finally place of business of the consignee, and if it is intrastate movement and the distance does not exceed 50 kilometers, e-way bill necessary, but part B not necessary. That's what we have seen. Then question number 3. Mr. Shah, a consignor, is required to move goods from Ahmedabad, Gujarat to Nadiad, Gujarat. He appoints Mehta transporter for movement of the goods. Mehta transporter moves the goods from Ahmedabad, Gujarat to Kedah, Gujarat for completing the movement of goods from Kedah, Gujarat to Nadiad, Gujarat. Mehta transporter now hands over the goods to Parikh transporter. So there are two transporters involved. Okay, up to one distance, one transporter, another distance, another transporter, remaining distance. Explain the procedure regarding e-way bill. There is only one e-way bill to be generated by the consignor from Ahmedabad, Gujarat to Nadiad, Gujarat. Now, once the goods are delivered to the transporter in Kedah, Gujarat, now the another transporter will be transporting. So we need to update the part B details. Okay. So part A can be filled either by Shah, recipient, or Mehta transporter, and part B they need to update. So on reaching Kedah, Shah, recipient, can assign the said e-way bill to Parikh transporter, and that Parikh transporter will update the part B details. Then question number 4, Agni Limited, a registered supplier, wishes to transport cargo by road between two cities situated at a distance of 368 kilometers. So 2 days is the validity. Calculate the validity period of e-way bill for transport of said cargo if it is over dimensional cargo or otherwise. If it is otherwise, 1 day. So 2 days for every 200 kilometers 1 day. So 2 days. So 2 days. Suppose if it is over dimensional cargo, 380 divided by 20, 368 divided by 20, that will be 18.4. 19 days will be taken as a validity. Then next question number 5. A consignor hands over his goods for transportation on Friday to the transporter. However, assigned transporter starts the movement of goods from the consignor's warehouse to its depot located at a distance of 600 kilometers on Monday. When will the e-way bill be generated and for how many days it will be valid? 600 kilometers now, for every 200 kilometers it is 1 day. So 3 days will be the validity. Then next, question number 6. Mr. Shambhu, a trader registered under GST in Delhi, is engaged in wholesale business of toys for kids. Mr. Nandi, registered under GST in Patiala, a regular return filer, supplies toys in bulk to Shambhu for selling to end consumers. Mr. Shambhu, paying tax in regular scheme, has not filed 3B for 2 months. Mr. Nandi wants to generate e-way bill for toys amounting to 5 lakhs to be supplied to Shambhu. Yes, it is possible. See, Nandi is selling toys to Shambhu, correct? Now, Nandi's outward supply is inward supply to Shambhu. So, Shambhu can like generate e-way bill, no issue for inward supplies. So, to be supplied to Mr. Shambhu, possible. Also, Narayan from Jammu approached Shambhu for purchasing toys. For the e-way bill, not possible. Why? As Shambhu's outward supplies is being made and they have not filed returns for 2 months, so Shambhu's e-way bill will be blocked. Okay. For the purpose of return gift on son's birthday parties, Shambhu wants to generate e-way bill in respect of outward supply, not possible. So, first we need to write about the blocking of e-way bill, and then applying the above provision, there will be no restriction in generating e-way bill by Mr. Nandi, as Nandi is filing the return, but e-way bill generation is blocked in case of movement of goods by Shambhu because they have not filed returns for 2 months. Okay. Then next, one consolidated e-way bill can be generated for multiple invoices. Comment on the validity of the above statement. No. For multiple invoices, one consolidated e-way bill not possible. For every invoice, one e-way bill is required. Thereafter, all the goods transported in the single carriage, they can make a consolidated e-way bill. Okay. Then question number 8. Messrs. Sakura Enterprises made an interstate supply of taxable goods valued at 47,500 and exempted goods valued at 2,000 rupees. Rate of IGST for taxable supply was 6%. Determine with brief reasons whether e-way bill generation is mandatory for above supply made by Messrs. Sakura Enterprises. So, 47,500 plus GST 6%, 1847,500 plus 6%, 50,350. So, therefore, 47,500 plus GST, rate of IGST for taxable supply was 18%. So, we will take it as 18%. So, IGST 18%. Now, 18% means 47,500 plus 18%, that will be 56,050. So, 56,050 exceeds 50,000. So, definitely e-way bill required. Don't add exempted value. Then next, when goods are transferred by principal to job worker, there is no need to issue a bill. Wrong. So, if the goods are sent on job work, whatever may be the value of goods, e-way bill is mandatorily required. Then question number 10, Mr. Shyamnath, a registered person, has caused movement of goods of consignment value exceeding 50,000 in relation to a supply and thus generated e-way bill. However, after generation of e-way bill, he found a mistake in the e-way bill and wants to edit it. You are required to advise. No, e-way bill cannot be edited or corrected. We did not discuss. The only option is what? Cancelling the e-way bill and generating a new e-way bill. But that e-way bill should be cancelled within 24 hours and it should not be verified by the proper officer. Okay. Therefore, in this case, Shyamnath cannot edit the e-way bill, but only he can cancel the e-way bill within 24 hours of its generation. Okay. So, with this, we completed e-way bill. So, all the portions, so we have completed and we are left with the problems and solutions discussion in practice manual from input tax credit chapter onwards. But otherwise, we have completed e-way bill related practice manual questions and even so this returns related practice manual questions also.